Good morning and thanks so much for tuning in. This is Trade Talks on BQ Prime. My name is Alex Mathew and with me is Hiral Dadia. Morning, Hiral.
Good morning, Alex.
Well, if we look at the handover from the US markets overnight, then it's not the best cues heading into trade for the Indian equity markets. US stocks ended lower. There are a few other big headlines to talk about from the US, but Asian trade as well, a little muted. You have the SGX Nifty that has indicated a muted start to trade today. And of course, Hiral will take you through the technical indicators. But there's one headline that I would like to point out that relates to an asset class that is outside of the traditional asset classes, and that's the crypto market. If you have tuned into the website this morning, you will have seen that the US SEC has accused Binance and its chief executive officer, Changpeng Zhao, of mishandling customer funds. And this has had a significant impact on Bitcoin and other cryptocurrency. Bitcoin, in fact, cracking as much as 6.5% to hit an April low. And of course, this also had an impact on the Binance coin as well. Several other aspects to talk about going into trade today, but let's focus primarily on the technicals because that is where you will get an indicator of the near-term trends, and that is that there is more short or there are more shorts building up in the system right now.
So overall, Alex, if you go to see in terms of what the data clearly is pointing out is there is positivity, but there is lack of momentum. That's the clear trend that we've been picking up so far. So clearly the index has actually moved its base now from 18,000 to almost 18,150. So that's a good news there. At least, you're covered at the bottom level. If you see in terms of the OI now, the puts have already started rising in the June month expiry, and this is from 18,100 to 18,200. And the final push will actually come once you actually see 18,500 puts getting written. So that's an interesting factor that we need to watch out for. Now, the highest put OI right now is at 18,500 levels, followed by 18,600. And if you see in terms of the call side as well, 18,600 is seeing the highest OI addition, followed by 18,700. So that's going to be a broad range we'll be watching out for. If you talk about the put call ratio as well, that's increased from 0.95 to almost 1.01 in trade. So overall, the support is coming in at 18,571 in terms of where Nifty is concerned. And after that, if you see in terms of Bank Nifty, the clear support is 44,029. That's the level we watched out for in yesterday's session. And the key resistance from an upside perspective will be at 44,220. So clearly, if you see, there is consolidation in the markets. To what levels we are able to take out this consolidation is going to be interesting, because till then, we're not really going to see major up moves. There could be bouts of corrections that could come in, but the underlying tone is absolutely positive.
You saw that. So another point, India VIX coming off further yesterday, and also the fact that it was a very range-bound trade for the benchmark index yesterday. The Nifty 50 trading in a range of 60 points from the high point to the low point of the day, ending with gains, of course, of 0.33%. Let's head to the stocks that are in focus in trade today. And I will say at the start, not the biggest headlines, but still important to mark. The Adani group of stocks is going to be in focus because of the announcement of its deleveraging program, or the completion of that deleveraging program. Sajid is joining us to give you more details there. Morning, Sajid.
Good morning, Alex.
What are you picking up?
So the Adani group has come out with this credit update after the end of the fiscal 23, which comprises of all the listed companies of Adani Group. They have completed the $2.65 billion deleveraging program, which included promoters paying off nearly $700 million, including the $200 million in interest for some of the share-backed loans, which has been talked about in the market. As a result of this entire deleveraging process, the net debt to EBITDA is at now 2.81 times. This is EBITDA on a run rate basis, which basically means many of the projects which came into commercialization in FY23, they have taken the run rate for those EBITDA going into FY24, and based on that, the net debt has come down to 2.81. The debt service has also improved to over 2 times, which was much below 2 to there. So they're sitting on a very comfortable debt service ratio, which is there, and cash balance has gone up to over $4.75 billion for all the portfolio companies to over 40,000 odd crores. Adani Group also said that the cash balance and the free flow from operations is roughly around 78,000 odd crores, which is good enough for all the debt which is maturing in FY 24, 25, and 26. And so they're sitting in a comfortable cash position going forward.
Important updates, Sajid. Thanks so much for that. Hiral, speaking about the Adani Group companies, quite a few of them have gained quite substantially over the last few months since, and in fact, that is going to be the focus of the coming months as well.
Absolutely, because if you see, since the reports did come out, the kind of flows Adani Group companies hit, the recovery has been now more than 50% already. So there is that confidence building that has already started to happen. And with this deleveraging that Sajid was already mentioning, it could probably aid well in terms of the companies. Let's see how investors actually react to it. So the entire pack, the 10 stocks, ACC, Ambuja, Adani, Wilmar, Transmission Enterprises, all these counters will be in focus in today's session, Alex. But apart from the Adani Group companies, the cement pack, we've been picking this up since yesterday as well, right? Clearly, there is a trend that's been picked up in terms of the kind of volume growth we could see. We have JK Cement that's in focus. In fact, Jaspreet is with us. Good morning, Jaspreet.
Morning.
I mean, clearly with JK Cement, capacity expansion is what they're looking at. They've made an acquisition. If you could help us understand what would this acquisition mean and where does it actually give them strength?
So this is a 100% all-cash acquisition of Toshali Cements. Toshali now is based in Odisha. So they have 2 manufacturing plants in Odisha. JK Cements, 9 manufacturing plants are primarily in Rajasthan, Gujarat, and Madhya Pradesh. So this is both a capacity and a geography expansion. And the company said so in its filing itself, where they said that the objective of this acquisition is to expand the company's footprint in the eastern region. Now, this is an in-principle agreement so far. There are some conditional precedents that need to be met for the deal to fully go through. It is expected to take about 6 months to wrap up. But yeah, definitely a capacity and geography expansion story.
Absolutely. And eastern region is what they will be able to really gain footprint in. In fact, you could also catch, we'll have an analyst conversation today at 12 o'clock to discuss what it means in terms of the cement sector as a whole. So that's going to be an interesting conversation.
And
today.
also, thanks so much, Jaspreet, for that. The recent report that we were talking about not too long back that talked about a structural positive for the cement space in India, saying that demand is positive. I believe we spoke about that just yesterday.
Absolutely. I mean, Sajid actually took us through all the details of the reports as well, clearly indicating whether the markets are ready to absorb a price hike or not is going to be the key question.
Speaking of price hikes, there is another industry that is seeing quite a bit of that, and that's the hospitality space. We've spoken about this quite often over the past year and a half or so, that travel bug having hit a lot of people going out post the COVID-19 pandemic, and that is resulting in higher occupancies for a lot of these hotels. We are speaking about a hotel company right now, that's Chalet Hotels here, and an interesting update here with regard to a new hotel that they've set up in Hyderabad. Monal joining in to tell us more about that. Monal, what's the latest update?
Yeah, so Chalet, as you mentioned, has launched a new hotel in Hyderabad with 168 rooms. And the best part about this is it's fully sold out on day one. So it's a 3-year period corporate contract that it's got. And according to Dart Research's channel checks, it's said that Deloitte has completely booked it out for 3 years. Also, what's unique about this property is that it's going to be managed and operated by an all-women team. It has another property in Hyderabad as well with around an occupancy of around 69%. But now this contractual agreement would mean 100% occupancy. Also, the average revenue per available bed is around 6,600. And it's expected that Chalet Hotels will be able to realize this same revenue from its new property as well, which assures it a complete revenue for its new property. The payback period is somewhere between 3.5 years. But post-tax, it'll be around 4.5 years. Now, that research said that, this would protect Chalet if the upcycle in the prices that we're seeing in the hotel space were to reverse. But it may also stand to lose a little bit on the upcycle because the management as well as the general consensus does mention that this upcycle trend in hotel rates is expected to continue. However, they're saying that it will recover this and capture in on this upcycle from its other property, which is also in Hyderabad. Now, overall, the brokerage foresees that this development is a positive for Chalet as it protects it. It's expecting growth and re-rating to play out. it remains their preferred pick in the space, and it has indicated a 26% upside to the current market price, raising the target price to 495 from 493 rupees per share.
All right, thanks so much for that. Incidentally, we were speaking with the management of Lemon Tree Hotels, and they were pointing out that they might have to increase prices as early as October. So that is somehow, I think, playing out across the board here.
Absolutely. And if you see hotel companies as well, in fact, let's pick up Chalet itself. If you see the YTD performance, almost a 21-22% kind of returns we've seen on this one. Apart from that, even the other companies, if you see like a Kamath Hotels, Lemon Tree, there has been good growth in terms of price performance, as well as from a valuation front. People seem to be still interested in this space. But apart from these names, a lot of other counters, Alex, that will be in focus. Let's start off with a Wipro.
Yeah.
I mean, the buyback was something that they've announced. We have more details.
Yeah, absolutely. I'll just take you through the quick highlights of that. The board has approved a buyback of 12,000 crore rupees, and that's at a buyback price of 445 rupees. The record date for the buyback has been set as 16th of June, and it is expected to be completed by the end of July. But there are a few technical indicators that are important to be pointed out.
Right. If you see in yesterday's session, Alex, in terms of Wipro, the stock ended pretty much flat. However, on the OI end, if you see the open interest, we did see shedding of almost 1% that has happened in terms of Wipro. Now, we have the record date, which is 16. But if you see the stock performance, since the time the buyback was announced to now, the stock has seen an increase of almost around 8% that has come in. So there is that up move that has come. I mean, basically, it's a trend that we've seen. That the buybacks always come in and support the stock price,
buying
right?
in anticipation of the buyback.
So that support has come in. Now, currently, if you see the premium with regards to the offer price, that's in that range of around 9 to 10%. And you have the promoters as well who've actually indicated, their intention to participate in the buyback. So overall, I think this would probably give some further support to a stock like Wipro.
And incidentally, this is part of the pack that has underperformed. If you look at the last year, it has, of course, caught up quite a bit over the last couple of months.
10% since I think April lows.
Absolutely. Let's talk about a couple of other stocks as well. SBI Cards has approved a 3,000 crore rupee NCD issue or raising of funds. We don't have a timeline for that. However, All Cargo Logistics, there's an update on Trans India Real Estate, which has agreed to further divest 10% stake in each of the 5 subsidiaries of All Cargo. IEX, this is something that we were discussing just a short while back. They've reported an 8% increase in volumes in May, but they've also reported a fall in the price, and we were wondering why that would be. I think if the viewers remember what happened last year, you had a bit of a power shortage issue in several parts of the country, which could have pushed the prices of power significantly higher. So it's likely that we're playing off on a higher base from last year. Let's talk about the primary markets as well.
Yes, in fact, apart from the primary markets, 2 more stocks, Alex, I want to highlight is a Bharat Forge. Now, in terms of Bharat Forge, majority of the institutional investors have voted against reappointment of Baba Kalyani as MD. Now, the overall voting is interesting with regards to little over 77%, but when it's the institutional investors who are voting against him, that's giving you some indication with overall what's happening at a leadership level.
Yeah.
Though he will be re-elected as per the majority.
So I was looking at the shareholding pattern as well, and you have about 44 odd % that is owned by institutions. You have a similar amount that is owned by promoters. So there is a significant promoter holding in that company. There was an advisory firm, IIAS, that had advised investors to vote against the reappointment of Baba Kalyani, and that had to do, according to them, with the compensation that he had sought. According to them, that is too high, and they had a very high fixed component of about 79% for this current financial year.
I mean, Bharat Forge will be interesting. And you have Landmark Cars, which actually listed in December 2022. Now, they will have 52% of its equity unlocked, and that will be available for trading from 22nd of June. So there could be some, movement in terms of Landmark Cars. So watch out for that one. But from the primary markets, we have IQ Lightning that will be in focus. Sajid joins us with more. Sajid, I mean, very few, IPOs that are coming in now in terms of what we saw in the last couple of years. What is this one looking like?
It's looking a little interesting. IQ Lighting, a third-party vendor, manufacturing of LED solutions, and for some of the companies like Signify, which is Philips, erstwhile Philips. So 50% of its revenue comes from Philips. The IPO is priced between 270 to 285. Opens today and closes on June 8th. It's a 606 crore IPO to 350 crores of primary issue, and remaining is offer for sale by the promoters. And the market value is around 2,200 to 200 odd crores. Now, financial wise, it's pretty interesting financials they have for the 9-month period. They have nearly 330 odd crores of revenues. They have EBITDA of 73 crores and EBITDA margin of 22.3%, which is slightly higher than its peer in this sector, which is Dixon, Amber, Ellen. All of them are into third-party contracting of manufactured products, and especially in the LED and other spaces or white goods. So it's sitting on a very high margin business because it's into high end of LED household lighting, and it's also getting into refrigeration and other areas which are supposed to be high end, with high margin business as well. So yeah, from a valuation point of view, it's little undervalued compared to the current peers, which is like Dixon and Amber, but and that's what is making it interesting, because some of the foreign investors think that there is enough money on the table for them to come and invest, and we saw the anchor book coming in yesterday with quite a few foreign investors in it.
Very interesting update, Sajid. Now, I think a lot of our viewers are watching this on their mobile phones or maybe on their laptops, but then in the near future, it's possible that you could use a virtual reality headset. And incidentally, there is a significant update in the space of technology, with Apple having introduced its mixed reality headset. This is something that has been in the works for quite a while, Hiral. Can you imagine walking down the street with a big headset on your head?
Absolutely. And in fact, not only Apple, you have Jio, which has already announced something very similar for Jio users. So an Indian for an Android, which is also on the works.
Well, let's see. $3,499 is what it is likely to cost or expected to cost when it is launched next year. Are you going to pay that kind of money? That amounts to about 2.9 lakh rupees. Tell us what you think. Do you think that it's worth it? Do you think that it will improve your user experience for content? Let us know in the comment section. In the meanwhile, we're going to go get set for trade, and you should do that as well. That starts in just a short while, and you'll find all the action right here on BQ Prime.